In this video, we're going to go over the basics of stock chart candlesticks. We continue where we left off from the last video. So hopefully you've been watching along. Now let's go back to learning some more things, some more theory. So we're back at our starter screen, stock screener, FinViz. And there are other ones and there are better ones, but this was what we started with, so we'll continue here for now. So I'm going to click screener. I'll do relative volume of 1.5, current volume over 1 million, and price under $1. So let's look at these specifically. I mean, I don't care too much, but oh, sorry. I was wondering why that looked bad. Or different, I should say. There we go. All right. Let's pick this one. Not that it really matters right now, but so I clicked on the stock symbol and I get the graph for that symbol. I can go back, and if you wanted to compare, this is how to use this particular stock screener. It's not like general knowledge or information, but if you wanted to compare several of these at one time, the graphs or the charts, you come over here to charts, click on that, and then it'll give you, and you can look at several at one time. If you click on any of these charts, you're going to end up at the single chart page like we did before. So we'll just go back and click on golden minerals again. Now, these red and green little vertical bars are called candles. We'll get to them in a bit, some later. And right now the chart seems to be showing as candle advanced. Let's do candle simple. And that is the candles and the volume without all the extra lines. We covered volume before, so I won't cover it now. Since you are not probably familiar with how to read candles, you can get a simple line graph, and that's something that someone new would understand easier. You can work with a simple line graph. This is a candle in the candlestick charts. It represents a period of trading, and depending on the chart, it could be a minute, 5 minutes, it could be 15 minutes, it could be an hour, it could be a day, 2 days, 5 days, a month. So we don't know what the period is, but it's a period of trading. These are also candles, and they have meanings by their color. The green one tells you the price was going up. The red one tells you the price was going down. With the green one, you read the bottom edge of the solid body as the opening price for that period. And you read the top edge as the closing price for that period. And so that tells you that at the end of the period of measurement, whether it was a minute, however many transactions occurred in that minute, or 5 minutes, whatever the period was, the closing price ended up higher than the opening price for that period. With a red candle, it tells you that it opened at a certain level and the close was at a lower level for that period. This part here, this little thin line, is called a shadow or a wick. I don't know what other names it might be. So these are shadows or wicks, and they mean something as well. The very tip of the wick, and in relation to where it is in the chart, tells you the high for that period, and this tells you the low for that period, and it is the same for the red candle or the descending candle as well. And I will try to demonstrate this with another drawing. Let's say that this described more of the trading detail for 2 different minutes in the trading day, without really regard to volume, but just the price of a single share of stock over, over minute 1 and over minute 2. So in minute 1, it started at around a cent, and then kind of, crawled along horizontally. Then it went up, crossed the 2 the 2 cent barrier or line, shot up to probably just around 3 cents or just over 3 cents. Then it just spiked, just dropped like a rock down, but stayed above 1 cent, and then slowly climbed up to past 2 cents. How would we describe this with a candle? Since it closed higher, closed at the minute, right? For that minute, it closed higher than it opened. Then it is a green candle body where the bottom is the opening price and the top is the closing price. What about the wick or the shadow? Because I told you the wick ends are the highs and the lows. So in this case, the high occurred right here, right? The high occurred right there. But it didn't close at that. So that's why we have a wick. So this end of the wick is at the high for the minute, and the low actually ends up being the same as the starting point or the starting price. Let's take a look at minute 2. It starts off at this point, and it's here. This is the starting price at the start of the minute. It proceeds to descend, price does, and it hits bottom here. I don't know, maybe it was a cent, stays there for just a bit. Then it starts to climb up again, goes up even higher than this part, and then drops and ends up over here. So we have some conditions here. We have a close that is lower than the open. We have a high that is higher than the open, and we have a low that is lower than the close. So how would we describe that with a candle? Now I eyeballed it, but essentially this is the high right here, which would be this point over here. This is the low, which is that point. This is the close over here, and this is the open. And red tells you that it was descending the price, closed lower than it opened. So that's the basics of the green and red candle and the shadows or the wicks. How about minute 3? Here we have something that opened at this point. Its low was here for the minute, its high was here, of course, and the close is pretty much the same as the open. I know it's a little lower, but let's call it the same for our example. So how would we describe that with a candle? So typically what you see is almost like a plus sign, where here's your high, here's your low, and the open and close are virtually the same. And they can be black or some neutral color on typical charts, but the color can vary. In this video, we covered the basics of stock chart candlesticks, and I will see you in the next video.